Egypt's annual headline inflation increased to a record 36.5% in July, driven by high food prices. The Egyptian currency has devalued 3 times since March 2022, and the pound has lost over half its value since then. In addition, the Russia-Ukraine war has added on to the country's inflationary woes. Bhavik Mehta from Century Financial explains how the war continues to impact Egypt.
So Egypt as a country has heavily dependent on wheat and sunflower oil imports to cater to its huge population of around 103 million people, which is one of the highest in the Arab world. Globally, if you compare the consumption of bread, Egyptians tend to consume more amount of bread. Hence, you have more amount of requirement of wheat. Now, what has happened is the breakthrough of the Russia-Ukraine war. Both these countries accounted for around 85 to 90% of the Egyptian imports as far as the wheat and sunflower oil is concerned. So that in a way gave a big amount of pressure to the way the Egyptian import system was working. So that basically is the legacy issue over the last 2 years that we are seeing with the high food inflation, which in turn is catering to the main inflation problem.
The reason why the prices saw such a sharp spike in the last couple of months might have to do with the grain export deal. It's a pact between Russia and Ukraine that allowed the export of grain through the Black Sea to stop the world food prices to soar and not create shortages in the Middle Eastern and African countries which imported significant amounts of food from Ukraine. Last month, Russia pulled out of the deal, once again raising fears over global food supplies.
Over the last 6 to 8 months, we were kind of seeing a stabilization in the food prices, primarily led by wheat, soybean oil, and corn. But the latest pulling out of Russia from the grain exports deal is a worrying sign. The initial market estimates were for the Egyptian inflation to come down by around mid or end of the next year, that is by 2024. But the way things are going, I think this is going to be a long stretched affair.
The IMF in December approved a $3 billion extended fund facility loan for Egypt after the Ukraine crisis exposed vulnerabilities in its economy. The first 6-month review has been delayed pending the government fulfilling a pledge to adopt a flexible currency exchange rate and to privatize more assets. Last month, it announced selling stakes worth $1.9 billion in state assets. But is that good enough?
Although the Egyptian authorities have announced something like $1.9 to $2 billion worth of stake sale, the overall progress seems to be very muted. They are actually supposed to announce something like $6 to $6.5 billion worth of deal by the end of next year. But the way the progress has been happening doesn't look promising because we are not seeing huge amount of reforms or big amount of stake sales that are supposed to take place.